Hi everyone, so today I'm here with Dom and we're going to be doing a new stock analysis video called EHang, and Dom's going to go ahead with the company analysis and then their current earnings report. Dom, whenever you're ready.
Thank you, Matt. All right, I'm sharing my screen. Let me know if you can see it.
Yeah, perfect.
Cool. So, like Matt said, we're talking about a company today called EHang, which is a Chinese company. So basically, their business model is they're an air mobility technology platform company. So their goal essentially is to make air travel autonomous, eco-friendly, and safe. So all the vehicles and drones and things that they're building, they're all battery powered, electronic powered. They don't use gas and things like that. They're also autonomous, so they're trying to minimize user error from pilots and things like that. Um, and they're trying to branch out into a variety of different regions and fields. So some of the things on their website they talk about are passenger transportation. So they have like actual planes. They have drones that they say for like taxiing, touristing, and then I don't know if I mentioned it before, but they're mostly located in Asian countries and then a little bit of Africa. So not globally in terms of the whole world yet, but mostly in China. I think it said like Thailand, um, parts of Africa, things like that,
Right.
like test markets basically. So like I said, they kind of are branching off in a variety of things, logistics, shipping, emergency rescue for fires, if buildings are on fire, wildfires, they can drop materials and things like that to help stop fire spreads. Aerial media, the last one obviously is just normal drones, just for typical things you would use drones for, that kind of thing. So they're trying to branch out and do a lot of things with their drones and kind of hit a lot of different market segments. And so we recently actually just got their Q3 results out. So we're going to take a look at that and kind of see what happened. So a few positive, few negative things. First thing is one of their newer models just released called the VT35. They said that they did get purchase orders for it, which is great to see. They also said that the uh, progress. Oh, as I was mentioning earlier, they have progress in Asia, the Middle East, and Africa in terms of trials for their drones and their different aerial aircraft that they're using to try to gain market share and kind of gain interest in the company itself. The article also mentions for Q3 that their currency is at 1.13 billion, providing flexibility for future R&D investment and product expansion. So good to see that there's some money. Oops. Sometimes I click too many things and I should just highlight. A couple negative things that came from Q3. They did say there was a slowdown in deliveries due to company strategic focus on operational preparations affecting short-term revenue. So not the worst thing, but just something to note. Also, gross profit margin has declined slightly to 60.8% in Q3 of 2025 compared to 61.2% in Q3 of last year and 62.2%, or excuse me, 62.6% in Q3 of 2025, so the previous quarter. They also did see quarter-over-quarter and year-over-year declines due to delayed payment schedules from certain customers. Not entirely sure what this means. Maybe some of their main interested customers decided after like one or two orders that they wanted to wait, kind of see what else was in the pipeline. Not sure, but that's kind of what they're talking about. That new model I mentioned is still in trial phase, and so it does have a high cost, as most new things do, which affects profitability because the more things cost, less people can buy it typically. And then the company did report an adjusted net loss of 20.3 million RMB, which I believe is how it's said, which is the Chinese currency in Q3 of 2025. Again, due to decreased revenue because they don't have as many orders as previously. So definitely some interesting things to consider from Q3, but also a few negatives thrown in there as well, just because it is a newer company. It's more or less trying to pioneer a new idea. So it's not always going to be successful out the gate. But we'll let Matt take over from here and he'll kind of talk about the financials of them, and we'll kind of dig into that a little bit more and see where they're going on that.
Okay, thank you, Dom. I appreciate it.
Thank you.
All right, so as Dom was putting it, we have a bit of an issue with the free cash flow because right now we have that they actually hit some kind of positive free cash flow activity, right? And now it's dipping back into negative territory, significantly negative territory. And then in the next 3 years, it will be positive once again. But right now, it looks like it's going to be in a bit of a gully, I would say. And this is the most recent earnings report that it's right about here, that it's going to hit kind of the peak of negative free cash flow, and then it's going to rocket up. into positive. So not great, and you definitely have to be careful because obviously, if you could tell, this company can be cyclical. Obviously, you just have to be a little bit cautious about that. The financial health of the company is going to be a lot better. It is a good photo here. So we have a lot of cash, a lot of equity, and yeah, debt is rising, but still cash and equity are way, 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 way better. They could pay off any of their debt at any time. So there's no concern here. It really looks good. Now we're going to check my DCF on this, and it's going to say it's 22% undervalued, which, you know, I don't like to bet on these. It's like not that big, especially it's high risk too. So it's like okay, I would say. It's not a bad company, but it's like okay. If we check historical growth, that was Wall Street forecast. If we check historical growth, it's going to say it's overvalued by 50%. I assume that's because historical growth is saying that it was growing at 30%, and Wall Street forecast is saying that it's growing at 52%. That's why it's 22% undervalued. I think Wall Street forecast is correct because the growth is going to be significant after the next quarter. I would say not this quarter, the quarter afterwards. It should recover, but you do have to be a little bit cautious that you're going to go through a bit of a rough patch. And lastly, we're going to see Tipranks, and Tipranks is going to say that it's a moderate buy. There's 2 buys, 1 hold, obviously 3 ratings. Not a big company, so not a lot of analysts are covering it, which I generally tend to stay away from. You have an upside of 56%, and then a low of 13, an average of 22.33. I would right now probably stay away from the company just because the low is 13. It's a moderate buy, so, and there's a lot of risk for the company, so you have to be a little bit careful. But more or less so, I would keep it on the radar, but just be cautious with it for now. I probably wouldn't buy it. Dom, is there anything you wanted to add?
No, I wholeheartedly agree. I mean, it's so early and
Yeah,
their product is very niche
yeah,
that
definitely.
it'd be better, I feel like, to just wait it out for a little and just kind of see if it really kind of starts to take off or if it's something that kind of becomes like a fad and then kind of like burns out.
Yep,
So yeah, I'm definitely in the same boat. I wouldn't recommend buying right away, but keep an eye on it because it is interesting. It's something
yep,
different.
definitely interesting. Yeah. All right, thank you, Dom. I appreciate it.
Thank you.
Thank you, everyone.